Hi, Assalamualaikum. My name is Niada Ashraf bin Anis. My number matrix is A24B A24B3914. Today, I would like to introduce about the business nature of Maxis Berhad, which is my part. So let's go. So first of all, what the business nature of the Maxis Berhad is, maybe we can look with a theoretical perspective. For you know, Maxis Berhad is one of Malaysia's leading telecommunication and digital service provider. It's founded in 1993, the company has grown to become a dominant player in Malaysia's telecom sector, offering a wide range of services including mobile voice and data, broadband, enterprise solutions, and digital innovations. To understand the nature of Maxis business, it is important to analyze it through established business theories and strategic frameworks. This essay explores Maxis business nature using industry analysis, value chain theory, business models, service dominant logic, and the resource-based view. Alright. So we want to go about the another part, which is industry context and structure about the Maxis. Maxis operates within the telecommunication industry, which can be classified as a technology-intensive oligopolistic market. According to Porter's five forces model, the competitive environment is shaped by high rivalry among few major firms such as Secom and Umobile. Moderate rate of substitute like internet-based calling apps and strong bargaining power from consumers to, due to availability of alternative. Regulation by the Malaysian Communication and Multimedia Commission (MCMC) also plays a central role, influencing pricing, spectrum allocations, and service quality standards. This condition shape massive strategy behavior and its continuous efforts to differentiate through innovation and superior customer service. Why, when we look about the value creation through the value chains about the Maxis, using Microsport's value chain analysis, Maxis core operation can be divided into primary and support activities. The primary activities include network operations such as infrastructure deployment like 4G or 5G, and services delivery through retail and digital channels, and after sales customer support. The support activities comprise technology development through research and investment in digital solution, human resource management, and strong organizational infrastructure. Together, these activities enable Maxis to deliver reliable, high-speed connectivity and digital products that enhance user experience and foster customer loyalty. And for the last one, I will explain about the hybrid business model, which what we call is buy to C and B2B approach. Maxis utilize a hybrid business model that caters to both business to consumer. This is what means about the B2C, both business to consumer, and business to business. This is what we call B2B segments. For consumer, Maxis offer mobile voice data, prepaid, postpaid, and home internet services. On the business front, Maxis provide enterprise solutions such as a cloud computing, cybersecurity, managed services, and Internet of Things, which is called IoT system. This dual approach allows the company to diversify its revenue streams and reduce dependence on one market segment. It also demonstrates the company's strategy alignment with emerging digital demands across industry. So that's all for me about the business of nature Maxis. Thank you.
Is David. My metric number is A24B3777. Today I want to present the business nature of Chelcom DG Berhad. Chelcom DG Berhad was officially formed on November 30, 2022 throughout the merge of two major Malaysian companies, that is Shelcom Axiata Berhad and DG Berhad. This merge made Shelcom DG Berhad the largest mobile operator in Malaysia. So the company's main service includes mobile voice and data, broadband for homes and business, enterprise solution, Internet of Things, cloud computing, and cyberbullying securities. Shelcom DJ also provide a digital lifestyle offering such as e-wallet, financial technologies, media platforms, and educational content, which supporting the growing demand for the digital services in Malaysia. Thank you. Here are the main core values of the Shelcom DGs Berhad, which is important to run the business. So the first company's core value is a customer obsession. Customer obsession, putting the customer's satisfaction first. The second one is performing relentless with the focus on innovation and quality. The third one is the stronger together, which can promote the teamwork. The last one is being responsible and caring by operating with the integrity and purpose. As a conclusion, Shelcom DG Berhad, it's not just a telecommunication provider, but it is a leading digital technology company in Malaysia. With a stronger service, a clear vision, and a commitment to innovation and sustainability, it comes to play a key role in advancing the nature's digital future. Thank you.
Hello, my name is Brendan Leonaliki Daniel. My Matrica number is A24B3715. Today I'll briefly explain the capital structure comparison between Celcom Digi Berhad and Maxis Berhad. Let's start with the debt ratio. In 2022, Celcom Digi Berhad had a debt ratio of 56.54%. It dropped to 54.82% in 2023, then rose slightly to 55.04% in 2024. Maxis, on the other hand, had a high debt ratio of 72.35% in 2022. It increased to 74.79% in 2023, then decreased a bit to 73.54% in 2024. Next, we look at the time interest earned, which shows how well the companies can pay back their interest. Celcom Digi dropped from 5.31 times in 2022 to only 2.85 times in 2024. This means they are having more trouble covering their interest costs. For Maxis, it went down from 5.14 times in 2022 to 4.0 times in 2023, but improved slightly to 4.90 in 2024. In summary, Maxis has higher debt but is slightly better at handling interest payments, while Celcom DG has lower debt but declining interest coverage. Thank you.
Good day. My name is Okonkwo Ejike Charles, reg number 824-83659. And today I'll be presenting an analysis of the market value ratio, focusing on the price to earning ratio for the main companies, Second DG, for the main two companies, Second DG and Maxis. The price in 2022, in 2022, yeah, the price to earning of Second DG was 42.55, which decreased to 31.82 in 2023 and later increased again to 36.41 in 2024. This can show that Second DG consistently maintained higher price to earnings ratios across the 3 years period. The slight dip in 2023 was followed by a recovery in 2024, indicating continued stronger investor confidence or positive expectations about future growth prospects. Investors seem to value Second DG more highly, suggesting positive market sentiment. Whereby in 2022 for Maxis, the price to earning ratio was 25.43, which increased to 30.31 in 2023, then later decreased sharply to 21.46 in 2024. This also shows that Maxis displayed more volatility in price to earning ratio, reflecting shifting investor sentiment over the 3 years. The sharp decline in 2024 suggests possible concerns about future performance, earnings, or market conditions affecting Maxis valuation. Compared to second DG, Maxis experienced less stable investor confidence. And in conclusion, second DG has a higher and more stable price to earning ratio, which indicates stronger investor confidence and future growth expectations. While Maxis has volatile price to earnings ratios, which also indicates fluctuating investor sentiments and market uncertainty. Thank you.
Now, let's look at the key findings from the horizontal analysis of Celcom DG Berhad and Maxis Berhad between the year 2022, 2023 and the last year 2024. Starting with Celcom DG, their total asset turnover improved a lot by 95.44% from 2022 to 2023. Their return on equity also saw a big increase of 101 percentage point 72% during the same period. However, their time interest earned dropped by 36.25%, meaning they had less ability to pay interest back in 2024, and their operating profit margin decreased by 13.28% from 2023 to 2024. Now, for Maxis, their inventory turnover fell sharply by 94.30% in 2023, which may mean slower sales or overstock. The good news is their net profit margin improved by 36.02% in 2024, but their current ratio dropped by 11.11%, which could signal weaker short-term liquidity. In simplified manner, Celcom DG shows strong growth in asset usage and equity returns but struggle with profits and interest payments. Maxis improved in profit and equity returns but saw some decline in inventory movement and liquidity. Thank you.
A good day. My name once again is Okonkwo Ejikechas, reg number 824A3659. In this part of my presentation, I will be discussing the vertical analysis of the income statement for the two major companies, Celcom DG and Maxis. And I will also highlight the financial performance over the past years. First of all, let's start with the Celcom DG. The company has consistently maintained a strong gross profit margins, ranging from 74% to 78% over the period. This indicates that Celcom DG has been very efficient in managing its cost of goods sold, which is a positive sign for the company's ability to generate profit from its core operations. However, their operating expenses have shown a gradual increase, moving from 78.77% to 82.36%. Despite this rise in operating cost, net income has remained stable at around 11% to 12%, which reflects good cost control and solid overall profitability. Now moving on to Maxis. Maxis recorded consistent gross profit margins of around 60%, which is slightly lower than Celcom DG's margins, suggesting that Maxis faces higher direct costs relative to revenue. The company operating expenses peaked in 2023, reaching 83.86%, which may have put some pressure on profitability during that year. But however, Maxis made notable improvements in net income, which increased to 13.25% in 2024, showing positive progress in improving overall profit margins. Both Maxis and Celcom DG were able to maintain profitability despite managing high operating expenses. Celcom DG demonstrated stronger gross margins, reflecting better operational efficiency. On the other hand, Maxis showed a stronger improvement in net profit margin in 2024, which indicates effective efforts in controlling costs and enhancing profitability. Thank you.
Assalamualaikum. Hello, my name is Nuria Afika and I will explain about recommendation for Maxis Berhad. So I have three recommendation for Maxis Berhad. The first one is liquidity management. The second one is inventory control, and the last one is debt reduction. So we move to the first one is liquidity management. So Maxis Berhad can reduce the short-term borrow and negotiate the longer payment term with the supply, and Maxis Berhad also can speed up their receivable collection to improve their liquidity ratio. And the second one is inventory control. Beside of that, Maxis Berhad can implement the inventory techniques such as just in time and use the AI power demand to make sure their stock level is optimized. And the last one is debt reduction. Maxis Berhad actually can lower their debt by use the by explore the alternative finance option to rebalance the capital structure from the current 70% ratio. And I will continue by founding sources for Maxis Berhad. We have four founding sources from Maxis Berhad. The first one is retaining earnings. The second one is long-term debt, and the third one is equity finance, and the last one is strategic partnership. So we move to the first one is retaining earnings. So Maxis Berhad can use the 20 until 30% of retaining earning to the finance target to improve their 5G network in major cities such as in Sabah and Sarawak. And the second one is long-term debt. Maxis Berhad actually have a issue borrow or obtain the fixed rate loans for capital intensive infrastructure project and leverage the 4.9 time interest to coverage their ratio. And the second one is equity finance. Maxis Berhad also can consider to use the right issue or private placement for major expansion and utilize the strong market to book ratio of over 5. And the last one is strategic partnership. Um, from joint the venture with with technology companies to share the cost. Maxis Berhad also can uh, take a risk to improvement their 5G infrastructure development.
Hello everyone, my name is Nur Adrisha binti Ishaq. My metric number is A24B3775. Today I will explain about my part, strategic recommendation for Celcom DG Berhad from 2022 until 2024. First, we recommend Celcom DG to accelerate 5G deployment. The company should continue to lead in developing industry-specific 5G use cases, especially in manufacturing, smart cities, logistics, and agriculture. With the momentum from the national 5G rollout and the presence of a second 5G network, Celcom DG has the opportunity to offer bundled and differentiated 5G solution to both consumers and enterprise users. Second, it's crucial to enhance cybersecurity. With rising cyber threats and tighter regulations, CelcomDigi must upgrade its platform using AI-based security tools. These tools will support stronger threats detection and adaptive privacy controls. At the same time, running scam awareness campaign and digital literacy programs can help build customer trust and confidence in the company's digital ecosystem. Third, CelcomDigi should continue strengthening its commitment to environmental sustainability. The company has set a clear vision to become carbon neutral by 2030 and achieve net zero by 2050. To do this, CelcomDigi must improve emissions tracking, adopt clean energy, and practice sustainable purchasing across its operation and supply chain. In summary, these three priorities 5G, cybersecurity, and sustainability will help position CelcomDigi as a future ready digital leader that contributes meaningful to Malaysia progress.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Ikmal Syami bin Arifin. My matric number G23A0250. Today, I want to explain about business expansion Maxis Berhad. Okay, we have three. For the first one, 5G technology investment. Second, digital enterprise solution. And then, customer experience innovation. Okay. For the first one, 5G technology investment. Yearly rollout of 5G service to provide ultra high speed internet to urban and rural communities. Second, digital enterprise solution, offering cloud computing, managed service, security, and IoT solution for businesses of all sizes. And then, customer experience innovation, developing user-friendly mobile app and personalized digital experience to maintain customer loyalty. And then last but not least, Maxis is transforming from a traditional telecom operator to a comprehensive digital solution provider. Thank you. That's all for me.
Be presenting how Shelcom DG Berhad is expanding its business across the South Asia with a smart and future-focused strategy. Firstly, Shelcom DG is building regional tech innovation hubs by partnering with the Asian telcos and universities. These apps focus on the digital education, AI development, and cross-border technology project, which positioning Shalcom DG Berhad as a digital bride in the religion. So next is throughout its the green roaming initiative, Shalcom DG plans to offer a carbon roaming packages with other Asian telecos. A portion of the revenue goes to environmental efforts like clean energy, showing its stronger commitment to sustainability. Third is Shycom DJ support smart city solutions by developing Internet of Things systems for traffic control, disaster alerts, and public Wi-Fi, especially in embassies and government areas. This help improve the city's life and support tele enables the governance. Finally, the company plan to cross-border digital accelerator to support tech startup in Malaysia, Thailand, and Indonesia. So it will be improve mentorship and funding to grow new innovation and strengthen the regional tech diplomacy. As a summary, Shelcom DG is not just growing as a teleco. It's become a regional leading in digital innovation, sustainability, and smart city development. Thank you.